Yo, what's going on, fam? Good to see everybody here. Hope y'all are enjoying, your end of your weekends here. Hope you guys are getting started for the week. We're gonna get started in about 1 minute, 2 minutes. Feel free to send out the link to anybody you know that's kind of getting their charts ready for the week as well. I got a lot of good stuff for you guys this week, I believe. So give me 1 more minute, guys. We'll vibe out, and I'll see you in a few. Alright. No cap, that song is kind of fire. I just found that song. That song a whole vibe. But what's going on, family? If you guys can still hear me clearly, let me know in the chats. Say what's up. Drop your locations. Alright, let me get this music turned down a little bit here so you guys don't hear it. Let's see who we got. We got Alex as the first person in the chat. Shout out to you, my guy. You're always the first person in the chat. Honestly, I'm going to challenge some people, man, to see if you guys could beat Alex to these live streams. I think consistently this man is always the first person in here. So shout out to you, bro. Definitely appreciate you. See that we got Jude in the chat as always as well. All right, what's going on? Good to see you. Cody out in North Carolina. What's going on, brother? Got Kim out in Brooklyn as always. Sean, who says he's currently in Vegas. Oh, boy. That boy out there having a good time, I'm sure. Got your package being shipped soon. Hey, big appreciate you, bro. Definitely appreciate you sending some Hawaiian treats my way, my guy. Hello from Houston. What's going on, Victor? We got Johnny in the house. Jude out there in Denver. Jorina out in Vegas, too. We got a few people out in Vegas, huh? I've been saying I need to make a little Vegas trip myself. I've never been, honestly. I don't know if a degenerate like me should honestly be going to a city like that. But nonetheless, I gotta make my way out there. We got the FL in the house. De Niro, Dom, what's going on? Got Christian in the chat. Dallas, what's going on? Luke. We got Vermont here. Got Florida. Yeah, that boy Nico out in Florida now. Shout out to you, my guy. Appreciate you hopping on. Hope that you got that Fall Guy situation sorted so we can get to that after this. We got Utah in the house. What's going on, fam? So listen, I kind of want to jump right into this week, guys. It's a pretty light week fundamentally. Oh, my bad. Let me switch over to the browser here and get rid of my YouTube tab here. But I wanted to get settled for the week. And as always, you guys know we start out every single week looking at the upcoming events of the week. Mostly the high impact. I'm going to leave the filter off for right now. We'll see what kind of soft data we have as well, because I think it's a pretty light week. But as always, we want to look towards these events because these are going to be events that we can play into throughout the week. So again, we like to play rumors here. We like to play leading up to news events. So if there is something that's later in the week that we can take advantage of, right? We want to begin positioning ourselves on these, Sunday, Monday, Tuesdays, leading into those, Wednesday, Thursday, Friday kind of news releases, and just to kind of be aware of, when to expect volatility, liquidity grabs and other fun little things that we can kind of trade into and around throughout the week. So without further ado, let's kind of take a look at this. Sunday, we did actually have some Bank of Japan news. You guys might have already seen the yen has had a kind of interesting open. Actually, a few things have had a pretty kind of interesting Sunday open here. But heading into Monday, again, this is a bunch of stuff we don't really need, the investing.com stuff. We got core durable goods orders out of the USD on Monday at 8:30. I don't think that's going to be a big news event for me. Pending home sales, again, more home numbers, guys. We talked about this last week. If you were on the session last week, there is a bunch of, kind of home data that is coming out. Last week, I believe we had, new build permits, I believe we had last week. The sentiment on this remains the same. We expect the housing market to be continuously to produce bad or worsening numbers as this data comes out. We do believe that the real estate market, as of the last month or two, has, most definitely hit a peak, especially with interest rates rising and all that fun stuff, right? Borrowing money just becoming more expensive, right? This is a market that kind of lags behind stock markets and cryptos and whatnot. So we do expect these numbers to be worsening as they begin to come out. So that's something to just kind of look forward to. The US dollar side on Monday. At the euro, we have Lagarde speaking and some other ECB members speaking as well. It'll be interesting to hear what they say, see if they've kind of adjusted their perspective of, their future outlook. As you guys may or may not be aware, the big rumor out of the euro, which is now less rumor, more fact, is that they will begin hiking interest rates. They will be leaving that 0% interest rate level the next time they go to make that decision, which I don't recall is the exact date, but I know the next time they do sit down for that, they will be in fact raising rates. It's widely expected they do a 25 basis point, so we're kind of just seeing if they decide they want to get more aggressive there, kind of looking for some hints in their comments of what kind of data that they want to see. Are they looking at CPI numbers, or they're looking at GDP? Like what is the actual, path to them raising rates, right? So we might get some hints in some of these speeches here. Let's see, on Tuesday, Lagarde speaking again. So a lot of Euro speeches this week, it seems like. ECB speaking all throughout the day. Let's see, out of the U.S., again, goods, trades, balance, retail, inventories. This is a bunch of soft data, guys. When we say soft data, we mean stuff like this. Retail numbers, specific. There's basically the data that makes up the harder data, right? So again, stuff like this where you get wholesale inventories, retail inventories. This is just basic soft retail numbers, right? They're somewhat specific in what they do, but they don't capture everything going on in retail. Again, housing price index numbers. Again, we all expect this stuff to kind of continue to decline. Consumer confidence is coming out. We might get some volatility there. But this is looking pretty light, honestly. Retail sales out of Australia. Let's see, Wednesday. Again, more speeches. A lot of Eurozone speeches this week. At a GBP, yeah, nothing. Look, more ECB speeches. Do they have any actual data coming out? Consumer confidence. Another speech. Yeah, pretty light week. The biggest thing is going to be GDP for us on Wednesday. US dollar, we got GDP coming out. These are the final Q1 numbers. It's funny, we talked about this last week as well. You guys can now see they have finally updated the forecast. As we talked about last week, this said 7.1%. We said there was no way it was coming out at 7.1% when it was last revised at negative 1.5. So yeah, again, that 7.1 just being a placeholder in the moment for that GDP result. Still expected to come out at negative 1.5%. I would probably maybe even lean that it ticks down a little bit more, maybe see negative 1.6. it's not really going to be that big of a difference. Again, people are expecting this to decline. What a lot of the market's going to be looking forward to, what I'm looking forward to, is because this is the final revision for quarter one. They actually put out 3 different revisions for the quarter. They kind of do like an early estimate, then an updated estimate, and then the actual final GDP. So this will be the final for Q1. It will come out this way, and then we'll start looking at those quarter 2 GDP numbers, which again, if they begin to come out in the negatives, we will officially be in that recession. And that's what the market's really looking forward to. So understand, GDP this time around, we mostly already know this result. It's been revised twice. It's at negative 1.5%. It might slip more, but if you see big reactions in the dollar, even if this slips more, it's going to be less about the actual differential between the negative 1.5 and whatever it comes out at. And it's going to be more about the fact that it's just increasing the probability that quarter 2 also ends up negative and puts us in that full-blown recession status. So yeah, kind of just a little bit of a nugget around that, right? It's really not going to be this number they're reacting to as much as it is the rumor of quarter 2. We got Powell speaking shortly after that, so I'm sure he's going to try to hype the market back up. They've done a fairly good job at that. Although some people would kind of disagree, I think that the Fed is, bringing a little bit of confidence back in their ability to return markets back to a stabilized point, even though they are basically fighting what's going to be a losing battle. Lagarde speaking again, a lot of speeches. Look, he's speaking again 2 hours later on the same day. This guy must have a lot to say in a lot of different places this week, because they put in him to work. Crude oil inventories, we know, happens every week. Not a big concern for us. Doesn't look like anything else big for even JPY or any of these New Zealand or Australian data sets here. On Thursday, we also have GDP coming out for the pound. They are projected to come out year over year at 8.7%, quarter over quarter at that 0.8%. That's actually not bad. They're not really sitting in, recession territory, but, they're getting close. If this begins to contract more towards the negatives, which again, I don't follow GBP data that closely for them. So for me, we'll kind of have to see what this comes out at. Again, because these are Q1, finalized numbers, this is not going to be, they're going to be looking towards Q2. Q2 is going to be the big thing, right? Do they get that first negative quarter over there for the GBP? Let's see what else we have. Euro, French consumer spending. Yeah, a lot of French and German data, Italian data. Is this still Thursday? Yeah, this is all still Thursday. Chicago PMI. There'll be some volatility, but the market's not going to look at that too strongly. So a lot of JPY data coming out this week as well. A lot of soft data coming out in here. They also have unemployment numbers coming out at the end of the week. We're going to look at this. We're going to take a look at GJ again. For those of you that are unaware, we are actually in GJ shorts. I'm personally in GJ shorts. With a lot of this data coming in Thursday, we might look for a reason to maybe scale some out of our trades. There's actually a lot of pound news this weekend too, or the end of this week as well. So we're going to kind of keep a close eye on that. Is this Friday? Yeah, this is Friday now. Friday, what else do we have? Manufacturing PMI, again, out of the pound. We're going to want to take a look at this for our GBP trades. Euro CPI, very important data here. Again, Lagarde speaking all week long, so we're going to have a lot of information about what they're expecting with going forward in terms of their interest rates. Again, they are expecting an increase in CPI, overall inflationary numbers. This is honestly, for what we want out of the market, we want to see this come out higher. We want to see inflation continuing out of the Eurozone. Again, they have left rates unchanged. So the worse inflation gets out there, the more the ECB is going to get put into a corner where they have to kind of go in and really start to kind of maybe get a little bit more aggressive on those rates. Again, the rumor or the fact for that matter, because now it's more fact than it is rumor, but it is that they're going to be looking at a 25 basis point hike coming out at their next, meeting. So the worse this data gets, the more aggressive they're going to get. They're going to probably go from 25 to 50 at some point. Maybe they do two 25s back to back. They do 25, 25. Maybe then they'll jump to 50. Kind of, again, like the Fed's been doing. They were doing 50 basis point hikes. Now they recently have done a 75 basis point hike as the data continued to get worse. So honestly, for what we're looking for in the macro, we would like to see the CPI number continue to kind of, creep up, maybe even not even creep, but continuously, steadily get worse, and put the ECB in a corner to, hike those rates. Because I think there's a lot of opportunity still left in the euro, especially against the dollar. We'll take a look at that on the charts. But I think there's a great opportunity if these CPI numbers continue. To wrap up the week, there is nothing else. Yeah, so pretty light week. The big highlights are going to be GDP out of the US for the US dollar, GDP for the pound, CPI for the pound, CPI for the euro, all of the speeches out of the eurozone, and then that CPI data again for the euro at the end of the week here. So not a crazy week, just a lot of GDP and CPI really, and then from there we can begin to make our assumptions. So let's take a look at the charts, guys, see how we could take opportunity from all of this volatility that's coming in, and see what we can do on the trading side. We are going to begin like we always do with the indices, and the NASDAQ had a very strong end of week last week. This is something we were kind of expecting on the analysis side. Unfortunately for us, on the execution side, it never really got low enough to entertain me to like officially put out a trade or a signal on this. So unfortunately, even though we were right again in our analysis, there was no group execution. I am actually in a buy from a whole different bias of like over here right before we were waiting for the pullback to kind of get everybody into the trade. But strictly speaking, again, I don't like to brag about trades that I'm in by myself. It's just not fun. Like, I prefer to make money with you guys rather than just by myself, right? So for me, I'm winning, but because you guys are not, it doesn't really matter. So again, the analysis was there, but we didn't quite get that execution. I will be real, this kind of did push a little further than I expected it to. So let's kind of take a look at what we're expecting this week. You guys can see the idea we were looking at last week. We're basically just looking for it to push below 11,230. It never got there. Came pretty close. Again, we didn't execute off that though. So a few things about this. We know that we've essentially been looking at this to trade to the buy side as like a dead cat bounce, right? We just didn't believe, again, that the momentum to the downside here was really going to continue, and we believe in a kind of larger cycle here happening out on the daily, right? So we believe that, again, like these are the bounds of like a larger daily time frame, and we're just kind of playing between this being our PSY, this being our selling climax. We'll probably get like an AR, then like an ST. There's the beginning of a cycle, right? Again, macro stuff, kind of expecting a larger range cycle. So we were expecting, pullbacks. Again, we talked about this 12,200 level, right? The 12,200 level is kind of our like median level, right? It's our average level. It's kind of where we expect price to kind of keep getting attracted to after making these kind of climax highs and lows. So we're kind of approaching that area. For me, again, we call this a dead cat bounce because if we look at this from an effort standpoint, right, a volume standpoint, right, what do we see happening with all of this break that we had last week, right? We push above these levels here, but really, what kind of buying activity do we have, family? Right? Is there a lot of action happening, all right, on this breakout, even though we're moving higher? And it's hard to get full perspective here. Let me go to a lower time frame real quick to get rid of those other volume candles, right? But as we're like breaking these highs, right, do we really believe that like a lot of effort is being put into this? Like, look how much effort was put in to bringing us up here, And like you can argue, yeah, there's a lot of effort here, but this is not when we broke structure, right? After we broke structure, again, the effort to the buy side has been, again, kind of declining here. So taking a look at this, again, I'm not fully convinced we're going to hold this throughout the week. I think as the week goes on, we'll actually kind of see a lot of selling opportunity come in this. But the reason why I'm going to like proceed with caution and continue riding my buy is, again, just because we break a level, right, and we move up and we just don't believe there's a lot of buying activity, doesn't necessarily mean there's any sort of sellers stepping into the market, right? You don't see any effort from the sell volume at all to make an attempt to actually bring price to the downside. So for me, again, because of me already being in a buy position, I'm going to let this thing just do what it does, right? I'm going to see if it comes up. And then once we start to get some conviction from the sell side, either through a structural break or a volume signature, then I'll start formulating an idea of what I think this is going to do next. Now, if I can just look to the left and look for like potential zones that we're going to come and still kind of liquidate, let me go back to the 4-hour real quick. All right, there's still a lot of inefficiency in the market up here. There's still a lot of inefficiency up here. This is why I'm not rushing into sells. Again, you guys might have a billion different names for this. Some of you guys might call it an imbalance. Some of you guys might use the FEG, the fair value gaps, right? Whatever your reason, again, for looking at these areas of inefficiency are. All right, I'm not going to, I don't use these as reversal points. Some people use the inefficiency fill as like a reason to get into a sell. But if you were doing that, you're just going to get liquidated 1, 2, potentially 3 times before you get any sort of reaction to the downside. So I'm going to expect a lot of this stuff, again, to fill until sellers come into the market. So what I'm interested in and seeing is what happens when it comes back up above this old supply. Because again, this is like the final inefficiency area. These wicks, again, act as an area of supply. Price is naturally going to get attracted to this area of supply. And then once we get that move, then we can kind of begin formulating something. So if you really kind of want to know what I'm expecting on the NAS this week is price momentum just to continue to the upside. And then within this area, maybe we form, again, a new cycle, right? I'm not going to sit here and try to predict this cycle. I'm not going to assume that it's going to be reaccumulation. I'm not going to assume it's going to be distribution. But based on some of the news events we have this week, I would say that the most likely path for the NASDAQ is to come up, grab some of this liquidity at the 11,300, 35 area, possibly even a little bit higher, again, deeper into the inefficiency. And then once we cycle out from here, I will expect, again, price to get naturally attracted back down towards this, 1,200 level, this 12,200 level. And I'm honestly expecting the week to kind of close out right where we opened. I'm not expecting the NASDAQ to do too much. I'm expecting it just to kind of cycle out and give us more data this week about what she wants to do going forward. So I think it's going to be a pretty boring week on the NASDAQ. To be real, I'm not really looking for any actual trades on this. A lot of my ideas for the week live in different assets. So same thing on US 30. All right, same thing on the SPX. The levels that we're looking at on US 30 is going to be for price to get magnetized. And you guys might be looking at this and say, well, bro, that's like a pretty substantial move. And you would be right. This is a pretty substantial move. Now, the problem that I have with trading into a move like this is I'm not buying, this high. I would have been buying down here where it logically made more sense off how we trade, right? We trade inside the ranges, right? This little case of accumulation, that's where I want to be trading it. You will want to go out? Go. Oh, my bad, guys. The cat wanted to escape from the room. Alright, so this is where I would have been trading. Now, that doesn't mean you can't find a lower time frame trade inside of here. You absolutely could. There's a few things, again, that we teach, that we talk about. One being, a test of like the lowest demand candle after the initial push up. And then based off the reaction you get here, you could look for like low risk buys. The setup on this would typically look like something like this, where we buy right below this demand candle. We run our stop based off current structure, and then we continue trading the upside. It's a very common trade that I take, very common trade that we teach in the course, that we talk about in the inner circle, right? You could find a trade like that. Again, I don't think these things are going to even hold this price though, so unless I'm looking for like a scalp in the morning with the team or something, again, it's not specifically something that I want to entertain. But again, you can catch opportunities inside of that. Same thing on SPX. For me, it's just not worth the potential headache of trading in that lower time frame price action. But again, this coming up, capturing liquidity above 40.22, and then coming back down to close the week roughly where we opened, maybe even a little bit lower, honestly, if some of that data comes out. What do we got in the chat here? Hey, Sky, what are your thoughts on JP Morgan's statement last week saying the Q2 numbers for stocks could be favorable? The way you phrased that is interesting. Q2 numbers for stocks, as in like stocks are going to close higher, like the NASDAQ, US30, SPX are going to close higher in Q2? Or are you talking about like Q2 like GDP numbers? Like what specifically did I didn't see said report or statement, to be real. I'm not sure when that came out. I'll be real with you. I don't really care what JP Morgan says. They're usually not a friend of market participants. So is the screen blurry for anyone else? The screen should not be blurry for you. If it is, you might want to hit the settings icon on YouTube and you can up it. You should be able to put it in like 1440p. It should be of like the utmost highest quality. Yeah, it shouldn't be blurry for anybody. It just might have just loaded on a low resolution. But yet, Daniel, let me know specifically what you meant. Like, is it the Q2, like the indices are going to close higher, or is it the GDP numbers? If they put out a statement saying the Q2 GDP numbers are going to be positive, I'd be interested in looking at the data that they're taking into consideration for that, because I just don't think that's accurate. I fully expect Q2 GDP to come out negative. As far as stocks rebounding, that's always a possibility, right? Because the big thing, again, rumor-wise, right, is everybody's going to hear the word recession, and that's going to put so much panic on the retail side of the markets that people are going to, sell into that news, and institutions will use that as a reason to, be short or midterm long the market. The Q2 numbers for indices, yeah, I could see it. They might be playing the fade on, again, we talk about climax news events all the time, right? Like the inner circle and stuff, right? Data isn't always what it seems, right? People are going to hear the word recession. That's going to be all over the news. It's going to be painted as a bad thing for every market. And it technically is, right? It technically is. But there's always opportunities inside of that. So when there's like a fear pushed onto retail, right, from like a media standpoint like that, again, hedge funds, institutions, banks will typically be on the other side of that fear for short-term bounces. That's why you see stuff like this, right? Like even this move up, it trust me when I tell you, it's not because there's a bunch of people buying stocks. It's because there's a lack of institutional selling, right? Just again, we talk about the volume, right? There's not even a lot of buying activity happening inside of here. But the institutions aren't sitting in the market preventing price from going up. This is, if you know how a market works, you can literally just put orders in a market because you own most of the supply and keep price artificially low. I'm not going to get into this on this stream because it really takes a lot of level 2 data. I'd have to go and look at like order books on crypto to give you guys like perfect examples, but they can sit in here just like a sell limit, bro. They can put a bunch of shares for sale here, and just because they know they own the majority, they know that the public can't eat through that. Same thing to the sell side, right? That's what we call absorption, and use terms like that. It's because the market, the dominant hand is artificially kind of moving price. That is what you're seeing here. There's not a lot of buying activity happening. There's just a lot less selling activity. Right? It's the absence of sellers. If there's nobody selling, even if you want to just buy one stock, you have to go pay that premium on that. They're basically forcing a market premium. But again, I could talk about that all night. If you guys really want, drop like some ones in the chat. Maybe this week, maybe I'll do like a public like live talk on that. But yeah, that's a whole different realm. But I do see why they would be calling that. Let's see. Change the settings. Screen looks amazing now. Yeah, definitely should. Right, definitely should. That's time to get in at a cheap price. Yeah, always. Whenever there's mass fear in the market, or even mass excitement for that matter, it's always a good opportunity. Again, this is what we talked about when crypto was up in the 60,000s, and we were at that point kind of looking at it from the case of interest rates coming, all the rumors that were coming. We were telling people like, hey, these markets are going to crash. Again, the average person is just seeing all the excitement, and they I'm telling you, they throw the idea out the window, right? They get caught in like this emotional bind where, and it's the same thing with the recession, right? Like they hear fear is just like panic, everything's going to shit. And we're gonna talk about that with crypto too. Like a lot of the bottoms might be in. That doesn't mean that things are gonna just take off in a rocket ship. That's not what we're saying. But a lot of bottoms might be in because again, mass panic, mass fear, kind of takes control. So I see you guys dropping those ones. I'll see if I can set up a class for that. It might be this week. It might be the end of this. If it is this week, it'll be the end of this week because I got a lot planned that I got to do recording-wise already. We're getting like videos started back on this channel. We've only been doing lives. I got a few videos planned for you guys. I've just been having to find like, new software for the new computer. But I definitely got you guys with that stuff this week. All right, so that's enough with the indices. That is what we're expecting the indices. We do expect, again, pops to supply, and that supply to kind of bring us right back down until we work some of this stuff out. What do you guys want to look at next? Let's take a look at gold. We usually look at gold. Yeah, gold was interesting. So this was last week's analysis on this, guys. Just kind of reiterate for what we were looking for last week. Oh, not the monthly. We were looking for pushes up into, again, this hourly, order block structure. Order block right on an order block. We continue to call that an order block. If you guys want to use the continuation block term, that's fine too. You guys can see we did execute a trade here. Unfortunately, I had mismanaged that trade, and we did not get as much out of it as we should have. We didn't quite get the retest exactly as we wanted it. But, we were looking at the market in a live environment. We were watching it kind of work its, supply and demand metrics out up here. When we do our live trading sessions, I think it was, what day was this? It's the 22nd. I don't know. It was either like Tuesday or Wednesday. But on our Tuesday or Wednesday live trading session that we do right here on YouTube, for the Inner Circle members, I kind of looked at this and we were taking sells in this area. We're running our stop kind of right above the OB. Kind of a wide stop. This is a little wider than we typically try to run. But because it wasn't giving us precisely what we wanted, and it had formed this candle structure here, we kind of just took the retest. You can actually see it even came and filled this wick, kind of put us in a little bit of drawdown. And then it just messed around for a whole while. And we have this logic that we teach, especially when we're live trading, is that like we like to see our trades work relatively quickly. I'm not really trying to sit in something all day if it's just playing with my entry. I don't like things playing with my entry. Typically when that happens, you have a higher chance of the trade failing the longer it sits there. The way we trade, based off of liquidity and order blocks and inefficiencies and stuff, typically price should move very fast from our entries. We shouldn't have to be sitting there and, again, watching this nonsense happen. So I ended up actually alerting everybody to kind of close out closer to the end of day. We bagged like 40 or 30 or 40 pips on it. The idea was for it to kind of come down and, again, retest some of these lows. You could see if we had just stayed faithful to our trade setup, it would have eventually came down and, given us our TP smacked. So it was a mismanage on my part. I was just getting impatient with it. We were looking at other stuff. I just wasn't interested in entertaining it all day, right? It happens. It's going to happen to you guys. It's happened to me. It's going to continue to happen to all of us, right? It doesn't matter how good of a trader you are. Sometimes you just make one decision and you look back and you say, well, in hindsight's 2020, we probably should have held this trade. So that idea ultimately did work. I got to say, though, now looking at gold, Or looking at gold, it did come down, capture a lot of this liquidity. I was looking for it to fill this wick. Again, it hasn't fully filled this wick, but it is remaining, with bullish market structure intact, right? We do have, continuously rising, lows, whether they're wicks, they come very close to each other, but it is, technically speaking, bullish order flow. You could argue the same thing on the other side, right, though, that you are continuously holding, lower highs, this potentially being a lower high, it can even come up as high as here, who knows. All right, so the market is kind of just in this period of really kind of just consolidating super tight. Because of the nature of this market and the nature of this wick and this liquidity grab, I'm going to look at gold with a bullish bias this week. I do believe it's going to seek and destroy, some supply levels up here. I still do, again, long term in the macro, want to be bearish gold. But I just see a lot of reason that it can come up and, again, fill some of these zones up here, take out people playing in all the noise. It kind of seems like this wick here has taken out a lot of people that were initially, buy side in all the noise, right? People that kind of had their stops below here, sitting in this liquidity. Feels like it's triggered enough liquidity to me to continue to trade to the upside. I don't know if I'm specifically going to take a trade, from these levels to the upside. I'm going to see what this looks like in the morning. And specifically, I don't really trade Mondays that often unless the setup is like super clear. So probably not going to trade this tomorrow. Probably going to save it for the Tuesday live trading session. And based on where gold is, I might potentially take a buy. The only real reason I would at a... Yeah, I mean, I could only... Again, I don't even think it's going to be down here on Tuesday morning. But if we can take out this low into this structure and give me... It's important you guys have to know that I only trade in the moment, right? We build ideas, we build areas that it could go, that it will go on these Sunday calls. But you have to understand what happens at this price zone is of the most importance, right? If it doesn't give us what we like on lower time frames in fresh market execution environments, we're not going to take the trade. But if we do push below this liquidity and it gives us what we want here on like Monday morning, tomorrow morning, then yeah, I would be like open to a trade. I think the realistic thing that happens here though is that this continues moving up into Monday, Tuesday, and then I'm going to have to kind of just take the market for what it is on Tuesday and see if we can take a trade. But in the long-term aspect of things, what I want to see this do is I want to see this clear this 1857 area, right? Come up into this 1861, 1862. We've talked about this last Sunday. We've talked about it in the inner circle. I want to see it capture liquidity between these two structure points. And then once it does that, I'm going to continue trading gold to the downside. So I'm bearish gold based off structure that forms around the 1860, 1862 area. I believe we do wick this area. I believe we capture all this liquidity, and then we trade to the downside. But before that, we have to get up there. So if you're looking at gold this week, if you guys can snag some nice pullbacks up into the zone, be my guest. I might leave it alone, though, because, again, you guys know I'd rather trade on my main bias, and my main bias is, to the downside. Although, questionably, I'm not as bullish the dollar in other places, so I might proceed with caution. All right, let's take a look at GJ. As you guys know, we are in GJ sells. If you're still holding GJ with me, right, let me get a 3 in the chat, right? Drop some 3s. I like the 3s for profits, right? Drop some 3s. And the live sessions, we do 7s, but that's okay. All right, drop some 3s for me now if you guys are in GJ with me, right? You would be a part of the inner circle if you guys are rocking. We've been in GJ since the 167.50 level, so we are chilling right now in about 220 pips of profit. Again, you guys know this was our overall bias. We are expecting it to come down, wipe this little reaccumulation range, possibly even this wick. So we're really looking at somewhere between the 163 flat and the 164 area, for our exit on this. We've talked about holding this long term based off some weekly cycles that we see. You know, we even have the potential for this to come fill this wick on the weekly down to 155. I'm not going to scare everybody on here and say that GJ is going to 155. It is a possibility based off what we see, but until we actually break into the 164, 163 zone, right, that remains a pipe dream. But we always have these pipe dream targets we're looking for, right? Well, first off, shout out to Nico, Johnny, Alex, and Kim, right? They're all riding this trade in profit, so shout out to them. We did book some partials on this. We did take some partials at 164.90. And again, GJ has had a pretty nice open to the week. So with that being said, like really, what are my expectations for this? You guys know I am looking to continue to trade this to the downside. There's no reason for me to go against my analysis from last week. Nothing has changed. I will say the only thing that has changed for me is I am still expecting a further pullback. I still wanted to see it kind of push above this area. I really thought we were going to get it at the open, right? I really thought we were going to run right out the gate. Nice up into this area. You guys know I love my continuation blocks here, right? Love to see it come up to 166.68. I know this is getting dangerously close to our swing entries, but again, we booked 30% down here. We've already paid ourselves. We are holding, we are chilling. We do expect deep pullbacks. You can't swing something, guys, for multiple hundreds of pips without, you know, at some point the trade's going to come back some, right? You're not going to just catch 700 pips in one direction. That doesn't usually happen. It will move 200 pips, move 160 pips against you, bring you back to only 40 pips of profit, to move then another 200 pips, then to pull back another 80 to 100 pips. That's how it works, right? The market moves in waves. So I am still potentially expecting us to come up here at the 166.32 area. I would love to see it. Just some like logic that maybe supports that. You do have like what's could be like a smaller time frame accumulation. I'm not going to really break that down, but we do see like, you know, the potential, you know, phase C order block here that we're perfectly retesting. We'll have to see if this holds. We haven't really moved away from it. Something tells me we kind of just sink right through this, but I would love to see, you know, us get some sort of reaction off any price level down here, kind of come up here, give us another entry that we could take, put our 30% back in the market, and then kind of continue lower. I don't believe that these lows are going to hold here. I highly, highly, highly doubt that they do, right? They should break at some point this week. So we're going to continue holding this trade. Again, if you guys are not in this trade, your best premium pricing is back above this range. But with the way the weekly opened and the weekly is already forming, you know, you're going to have to really hope for some good GBP data to come out to support, you know, a stronger pound. Now, make no mistake, guys, right? Make no mistake. I'll make this very clear, right? We very much know that GJ is very much bullish, right? We know it's bullish. We're not ignorant to that fact. A lot of people are looking at this probably saying, like, why are you even in shorts on this thing? And there's a few reasons. One, the wick fill and the lack of follow-through after said wick fill. One, the momentum from this very bearish candle that actually closed up. A lot of people would look at this candle right here with the giant wick, and a lot of people would actually expect this candle to be some sort of like bullish price action candle. That's not entirely true. When you break this down on like lower time frames, it's more bearish than it seems, right? You can't just take a candle because it has a wick and assume it's going to move to the other direction, right? If you were going to make that assumption, you know, these moves should have held. This move should have collapsed, right? Again, like, yeah, this formed it and it did fall, but like, why didn't that logic work here? Why are these candles any different, right? They're more or less the same exact candle. One just closed bearish, one closed bullish. And you might even say that, like, that breaks that logic even further, right? So just because you got this scary candle don't mean anything. Look at the effort here. There's actually a lot of selling effort that came into the market. This is an early warning that sellers are beginning to step in, even if it's only for, you know, a specific time. Maybe they're just setting a new larger reaccumulation. That's all fine and dandy. That's besides the point. But we have faith, again, especially when this candle closed and there is not a follow through on bullish action, right? You have to kind of take this into account. So again, we are looking at this at coming lower. You know, if it wants to form a broader, longer reaccumulation here, that's cool, right? But who knows what rumor we're playing on this, right? Who knows what rumor we're looking forward to, right? If you guys know the rumor that we're playing on this, All right, write it in the chat. And it's okay if you don't. I'll break down why. It's very important from last Sunday. I'm actually checking to see who was paying attention last Sunday because I really dropped some sauce last Sunday about the money flow that's going to be happening in the market going forward, right? And I want to see if anybody paid attention to that because I know it went over a bunch of people's heads. I know some people think I'm crazy. That's okay. The market, with time, will either prove me right or wrong. Right, but I want to see if anybody knows the rumor that I'm playing on this. I'll give you guys 30 seconds here. See if anyone knows. Oh, you check some of these trades. Yeah, we're still looking good. Now, nobody knows? Alright, so listen, I'm going to give it to you guys. Alright, the secret lies in the Swiss franc. The Swiss franc made its first adjustment in interest rates. Right, made its first adjustment in interest rates, and that's actually what drove a lot of this initial yen strength. Right, you gotta stay awake to this. Right, stay woke. Pay attention. All right, the Swiss franc changed its rates from negative. Hold on, let me show you guys this data. Hold on, let me just pull it up. Let's go back here real quick. Right, let's just look at these central bank rates real quick. Right, so again, we know Federal Reserve 1.75, Bank of England 1.25, Euro at 0, Swiss National Bank negative 0.25%. All right, they were negative 0.75%, so they did a 50 basis point hike, brought themselves over to what a little bit less than what the Bank of Japan is at 0.10%. This is the first time they've made a switch in a while. They're also the only two currencies here that are sitting at negative rates. This is an early sign, right, that they may be looking to go back towards positive rates. The Bank of Japan very much knows that they're in a bad spot. Right? The Bank of Japan has also begun to start offloading some of the assets on their balance sheet. So they're starting to do some of the early things that the Federal Reserve did, some of these other central banks did when they began to hike rates. Right? So when we start to see that, right, we have to ask ourselves, what's going to happen, right, to sentiment, right? Abel talks about sentiment all the time, right? Shout out to him. I see him in the chat there, right? Shout out to him. Right? He talks about sentiment all the time, but what's going to begin to happen to sentiment if the Bank of Japan makes a shift, even a slight shift, right? Even a slight shift to just 0%, right? They just go and they just match the euro, right? Just at 0%. Sentiment's going to begin to change. A little bit of confidence is going to come back into that market. Now, make no mistake, the Bank of Japan has absolutely done the worst job. They've pumped nothing but tons of money into their economy. They've done crazy things over there, far longer and at more aggressive rates than most of these other central banks have. All right, but they're starting to feel the weather of that storm they created, right? They're starting to feel the impact of all of that, right? So I'm playing the rumor, right, that the Bank of Japan, much like the Swiss National Bank, is going to begin to shift that sentiment, right? They're going to begin to look at increasing rates, coming back to a 0% interest rate. And if you know anything about the Bank of Japan, they like to be kind of aggressive, or they have a little bit of a history of being aggressive. So it's in my opinion that I don't even think they go to 0%. That might be their first move. They might be like Island, just lean off the negative real quick, go to the 0%. But it's my belief that they are going to get aggressive. And when they get aggressive, they're going to be easily matching the rates of other central banks, right? They can very easily jump 50 basis points, 75 basis. They could do a 100 basis point hike, right, and be right at 1.10% and be matching that of the Bank of England. And if they begin to do that, and again, it's my belief, right? A little birdie came to me and told me this is probably what's going to happen in the next 3, 6, 9 months, right, out of the Bank of Japan, right, that they're going to begin doing this. And that begins to happen. We are going to begin to see things like GJ, like UJ, begin to see a lot of selling activity come into them. And again, this might take some time to work out, right? It might be, again, if you guys are looking at this from a Coffeean standpoint, your PSY, your buying climax, your AR, your ST, that's fine. Maybe we're going to come down here and create a sign of weakness. cool, but then we might still have to, you know, cycle out, right? That's fine. That's besides the point. I think the biggest opportunity is going to be seeing that early on in this phase B, getting that sign of weakness, getting out of the market, and then waiting for that phase C environment to really kind of take the stuff way to the further downside. Again, if the market calls for that. But I see a lot of opportunity here with the Bank of Japan beginning to make balance sheet adjustments and rumors, again, and seeing stuff out of the Swiss National Bank. And again, they're not tied together, right? Just because the Swiss National Bank does something doesn't mean the Bank of Japan is obligated in any way to follow that same path, right? But because they're both traditionally seen as safe haven currencies and they do have policies that are, you know, somewhat similar, and again, they do similar things, again, both sitting at the negative interest rate percent area there, right? Because of that, right, we can kind of play these rumors to our advantage. So that is why we're looking for like multiple 100-point swings here. Again, you guys heard it here first. Maybe I'm completely wrong. That's cool, but don't be surprised when I drop a video in 6 to 9 to 12 months that, you know, shows me saying this now and the result of what actually happened. And if that's the case, right, shout out to future me, right? You know, we always like to play them rumors and, you know, keep it up, bro. That's a little encouragement for my future self. But yeah, that's what we're looking at, GJ, guys. It should be a beautiful trade. So I am looking back above this 160 level. All right. Let's see, what else should we get into? Let's get into oil. We're going to keep it light this week. We're going to do oil. We're going to talk about crypto. Give you guys a little bit of my insight on crypto. And then maybe I'll take one pair request, unless people from the inner circle got some stuff. But you guys know you guys can ask me, you know, later in the night and throughout the week. But let's take a look at oil. So oil, guys, for the past week and a half, even 2 weeks, we were expecting sells on this. Again, much like gold, unfortunately, this is a case of the analysis being correct and just us not executing. We just never got the pullback that we wanted up here to initially put us in, right? This fell short. We were looking for it to come just up here. I had an alert set and everything. We never got it. It absolutely tumbled. Same thing last Sunday. We talked about how it was going to play inside of this range. You guys can go back. All this stuff is documented. All of this stuff is documented on the channel, right? We talked about how it was really going to push above these levels. We were looking for up here, and then for it to spill over into the demand areas that, you know, we're currently kind of, you know, rising from. So again, very, very kind of classic stuff out of oil. At this point, though, I'll be honest. A lot of you guys know I do believe in oil returning back down to 85. I gotta be honest, though. I'm looking at oil, and I'm kind of bullish on it, right? Kind of like I'm bullish on gold, back up to that 1860. I'm kind of looking at this like, okay, yeah, you know, I do eventually want to get that 85. Maybe, though, maybe we need to come back up and grab some liquidity. We talked about this order block. We had our doubts about this order block. We did form distribution up here. We did push down, but I just don't see a lot of, and unfortunately, I don't know why volume's not showing here. 1 second. Why is that only for that? Can I get WTI USD maybe? Why is this so annoying? Can I use the futures? Okay, we can use the future price. Again, so I'm not massively convinced by the sell effort on the way down here. So I am expecting oil to honestly have a pretty good week. You guys know in the inner circle chat we did talk about it kind of retesting, you know, this daily OB, and we were looking at you know, buys down here. Unfortunately, I never sent the official signal, even though I was trading this for myself on my flip account. You know, so I am, you know, biasly in buys on this right now. I am in buys all over this range, from various levels. I'm in from down here. I'm in from in here. I have some entries in here. Right, I'm actually massively long on oil right now. My idea is that we do come up into this area here, though. Again, you guys know this is not what I consider a valid order block. What's going on, Bitcoin Mommy? Good to see you in the chat. Always appreciate you hopping on. Alright, you guys know this is not technically a valid order block for me. We would call this a continuation block. And a lot of times, again, if you guys know, we do expect this to break. We do expect these smart money traders to get liquidated on this just because the location of this order block is not ideal. The location of this is just not ideal. It's not where you want an order block to be formed. And the failure rate of it is, upwards of, 65, 70%. So most times this is going to get liquidated. That doesn't mean you fully move past it, but again, people trade smart money. They enter at the 50%. They put their stop loss right above the high. And so any price movement above the high liquidates them. And that's basically what we look for on these like stupid little continuation blocks here. So it is my belief that oil does have a really good week. I was looking for like the 112 area personally. I was looking for it to kind of come up here. But my idea is that if it does come up and fill this wick, there's a ton of inefficiency inside of here. There's this order block, which is just begging to get liquidated. So I really do think oil is going to have a nice push up to the 117, 118 levels. It had a very interesting opening to the week as well. It opened up and it kind of immediately ran down, and then the 9 o'clock candle kind of hits, and we've kind of, erased that. Again, it playing off of continuation candles. Again, we don't call this an order block. The location of this is not ideal, but the way I'm looking at this is that this is a, type 2 accumulation, and what you're seeing here is that BULPS, and that oil will continue to kind of push up into 117, 118. Buyer gas. Now, yeah, they're also expecting, gas and oil, again, have relationship, but, the price of gas can move without the price of oil and so forth. But yeah, they are saying that gas, again, you guys have 4th of July weekend coming up, will be at, record highs. There's a lot of price gouging that happens this weekend. We know this. It's very common. The price of gas is already up there. Whatever you're looking at pricing for this week, you're probably going to be paying 10, 15, 20 cents more by the end of the week. That's, with 4th of July coming up, that's just very obvious. Does that play a little bit into my bias of why oil might push up? Yeah, a little bit, but it's not like, that's not the rumor I'm trading. It's just, I really think this looks good to the buy side just based off the daily, right? I like this little daily demand zone. We played inside of this a lot. We accumulated here. We have some nice pushes out. My only problem really is like the buy volume that we're currently seeing. But again, it's Sunday, right? This is all futures pricing. The real markets are not even open yet. So we got to really see come Monday morning what the volume looks like. But I wouldn't be surprised to see us push right above here on continued higher effort or matching effort for that matter. And us coming up to these 117, 118 levels. So I don't really have an entry for you guys. I think honestly, this was your entry, right? Earlier was your entry, right? This nice push down into this demand candle. That might be some of your best pricing for the week. Maybe we come down and test this stuff in the morning here. Order block traders, you guys could try there if you really want to. Maybe you even get like a little sweep of the low before it goes up. But I would, again, not even would, I personally am trading oil to the buy side. And I'm already in those positions as a full disclaimer. So yeah, we'll see what oil is trading at the end of the week. Again, my best guess here is about the 117, 118 level. Maybe we don't close that high. We'll probably fade off some. But we definitely, in my opinion, seeking and destroying that 117. Now, I do want to talk about crypto. This is a trade that we're in. We bought some Ethereum down at the 950 level. Some of you guys, this might be your longest that you've ever held a trade. I have a lot of people that trade intraday in the inner circle. We've been holding this now for what is 7-8 days. There's really in my perspective of things, this is not a long hold. This is like literally a week. We bought this like last weekend. But some people haven't held a trade 7 days, 8 days. So this has still been working out pretty well. We talked about, potential re-entries when it was down here, but I personally didn't execute on anything. I'm going to continue riding this. Our plan is we are looking at crypto pulling back to the so for Ethereum to the 1600, 1700 price range. We will be taking some profits if it pops up into the 1300 range. I've kind of just been trying to remain patient on that. We got this nice little push to 1270. Bitcoin, I did the same thing. All right. I'm not really looking to trade in here. I think we get one more nice little push up. The reason I'm looking to take profits is because just looking at like this market, again, the buying activity very low, right? What we're looking at is essentially a dead cat bounce. So we snagged, again, premium price entries. This is why we trade early. This is why we trade hard. And then we kind of ride that out. So we're going to begin to kind of scale out, again, 30% here, 80% up here. And then if we do get, you know, deeper pushes up into here, we'll take that final 20%. We'll kind of just close out the position because we will be expecting, just like we expect on NASDAQ US 30 and so forth, is once we clear this liquidity in this final little inefficiency zone, and again, whatever the path is up there, we do expect a new cycle to form. And then with that data, we're going to trade this again to the downside. Now, I do want to bring something to everybody's attention, right? And I've had this discussion with a few people, right? There's like maybe a list that I can count on one hand of people that like I respect in the space enough to actually care about their opinion, right? Abel being one of those guys, right? Abel being one of those guys. Another one is my boy Jordan Morgan, right? Shout out to him, Mr. Seven Sources, the whole Trade House crew. And like I was talking to him about this stuff, right? And like just what we're, you know, expecting going forward. And just like, has this captured enough liquidity yet to actually be the low? And like, I wouldn't say we're in disagreement, but we have like different ideas. And again, there's not enough data for either of us to really make a decision. I'm sure he has his plan, whatever his plan is, you know, fully agree, fully support it. Our ideas are basically the same, but I am entertaining the idea that this is the low. A lot of people are calling lower. A lot of people now are like, oh, Bitcoin's going to go to 12K. Oh, Bitcoin's going to go to 8K. Oh, Ethereum's going to go to 300. And I wasn't even one of those people, right? I would love to ape in all the money I've had sitting on the sidelines into $600 Ethereum. I would love to do that. But again, I have to remain logical. I have to begin to question my bias when everybody else in the world sees the same thing. When everybody's calling lower, I gotta be that 10th man. Right? If you know the 10th man rule, right? Shout out to you. If you don't know it, it's taught and explained in the World War Z movie. Great movie, a zombie movie. But that 10th man rule, that's me. If there's 10 people and everybody comes to the same conclusion, the rule is if there's 10 people and 9 people come to the same conclusion and everybody sees the same thing, it is the duty of the 10th man to look the other way, right? Assume that everybody is wrong. So that's me, right? I'm always playing that devil's advocate, that 10th man. So a lot of people call him lower. And I'm actually entertaining the idea that maybe this is the peak low. And a lot of people are going to be like, you know, because again, everybody wants to buy lower. It's emotional. I get it. I'm with you. So do I. But there are cases of accumulation that happen where you get a climax low and that is your low. Right? These are called rising channel accumulations. Right? They play out something like this. Now, again, this maybe not be the exact accumulation channel that we get. We have no real retest to the bottom structure here, which is really what we need to confirm the rising accumulation. But again, I want to show you guys an example. Again, this is stuff that I don't mind sharing out to everybody because it's just history. But if you come back to gold, right, way back here, this is the same type of move. It's the same type of move where you get like a harsh sell-off and then you get like this rising accumulation. And I'm building the idea for this, right? And what we're basically doing is saying that like crypto is potentially in like, you know, right here, right? And then again, we're looking for this bounce and then you get this, again, this longer term rising accumulation. This is a potential idea. I do want to entertain it. I would hate for this to be the case because that means we really we missed on the prime pricing, at the lowest pricing point. But it does mean that, you know, as long as we're aware of this, then we won't get so greedy with wanting lower that we can begin to build out like an accumulation plan. So again, I like to think way outside the box than most people are thinking about. So if it seems a little crazy, that's cool. Just let me know. Just drop a crazy in the chat. Say, no, that's crazy. That's crazy, bro. You were wrong. That's just not going to happen. You were wrong. But again, you guys can see me kind of drawing it out here, right? Where we get this kind of like rising channel, right? Where you accumulate, right? And we just do this for like the longer term, right? We sit inside here and we still get harsh sell-offs. And then eventually to the point where, yeah, we move to the upside. That can absolutely happen. It can absolutely form a rising accumulation that's long enough to match the halving cycle. And then we would be sitting in there. I mean, even this is, I mean, again, like the problem with this is that it's probably going to have to form on the weekly rather than the daily. But again, it's an idea that we're entertaining. I do see it as a possibility, but we won't know for sure until we see what sort of reaction we get to the downside. So just an idea. Again, you know, I do see a lot of altcoins specifically, things like Algorand, XRP, Sandbox. I mean, whatever your favorite altcoin is, Quant. I see a lot of that stuff continuing to fall. I see 50% decreases there, but I think a lot of the majors might have their low end. So just an idea, something that we'll revisit in 6 to 9 months when you guys are still here rocking with us and you guys can kind of see a form for yourself. But that is the overarching idea. Water-powered engines is the move. Yeah, if you're trying to get shot, if you're trying to have the CIA come after you, bro, they don't play around with that. There are absolutely water engines that exist. You can make them. Hydrogen engines, you can. There's a whole bunch of different ways you could power a vehicle. But if you want to, you know, it's a good way to end up 6 feet under, you know. It used to be like a dream of mine when I was younger. I was like, oh yeah, like making a water-powered car would be cool. Nah, bro, I'm too big of a conspiracy theorist for that. I already know the punishment for that. That's the 83.5% level of the whole thing. Yeah, bro, I don't really play fibs like that. But it's a pretty deep retracement, can't lie. If there is no volume with the move up, how will you feel about it? Can you compare the volume on gold and Ethereum? So you're talking about the rising accumulation? Yeah, so I mean, like, if we look at the rising accumulation on gold, like this, and just so you guys know, that was an actual, like, I actually traded that accumulation. I'd have to go way back, but like Clay and I traded this, and like we were looking at this, and we were telling people at this point, again, I can go find all the, I could hit up Clay. Clay's got it all, but we were buying gold down here, telling people it was gonna go to 1650. Some of you might even remember that we were like calling like 1650, 1550 from these 1100 levels because we saw the rising accumulation. Now, if we kind of take a look at some of the volume profiles here, again, if you look inside of just this range specifically, we talk about some of the effort. So one, like, you definitely have climactic action here. Or you definitely have climactic action. Some of the highest sell volume that they saw in a very long time. There's a lot of sell volume up here, but that's much higher and less relevant than a lot of the other data of the move down. Right, so you do have, again, climactic action here. Again, you have your phase B kind of increasing demand. You guys know in phase B, the bulls and the bears battle it out. The supply and the demand battle it out. I don't know why I always look through there when all of my stuff is favorited, right? So you have your early kind of phase A stuff inside of here, and then you have all of your phase B stuff. And inside of that phase B, you can see, again, buyers were in control, sellers were getting absorbed. Even though they were trying to bring price lower, they continuously could not break structure. Very, very classic absorption move. Inside of here, you're looking at what's, again, furthermore absorption. Also retesting. I'll be honest with you, there's no clear-cut order block on this time frame. On the 4-hour, again, I don't have the, do I have the backtest thing right now? I don't think I do. Oh, I do. Oh my god, I do. Had I known that, I would have just done this before. Hold on. Oh no, don't do that. Oh, bring me back, bring me back, bring me back, bring me back. Hopefully it lets me go to the 4-hour here. Alright, yeah, I thought I didn't have that right now. I don't like paying for TradingView. I don't really get any benefit other than doing those back testings. Alright, so I can't go to the 4-hour, but there was like 4-hour. You can test it for yourself if you have the bar replay feature. But there was 4-hour order block structure inside of there. And then as you can see, again, as you move out of the range, every time the sellers begin to come in, there's just no effort price-wise. There's just no actual selling off. So there's nothing but absorption in this range. Now, you can't really compare this with Ethereum because Ethereum hasn't specifically began to do its cycle. So you don't really have too much you can compare with. But again, you can see, you know, climactic action beginning to come in here. Now, again, you can argue all day that, all right, cool, I see the climactic action, but we just don't have any further data to then, again, sustain that there is buying activity in here. Because, again, if you look at this, there is no substantial buying activity. We just talked about this before. But based off what you've seen on gold, you wouldn't expect substantial buying activity to come in yet. Because you're still in what? You know, arguably maybe phase A. You're maybe just now beginning phase B. Right? If you're going to say selling climax ARST, which I wouldn't even do because this isn't a deep enough retest. So you're arguably still even in phase A here. Right? So you can't really do a volume comparative analysis until we get more data. But in like 3 weeks, bro, 4 weeks, yeah, we should have enough data to, you know, to do that in more in-depth stuff. Again, we have nothing on either side of the market. The market's just been decreasing in volume as price moves up. I really thought the same thing. No BS. Yeah, I mean, listen, it's just an idea. It's just an idea. We get these crazy ideas, and then we wait for data to kind of start, you know, filling out that idea. And if the idea is wrong, the idea is wrong. It, you know, it is what it is. There's a million ideas that we formulate that, you know, we want to see that either don't work in the moment, or they take longer to drag out, or they just don't work at all, right? And that's part of the game, right? You build these crazy ideas, right? Again, I would prefer that this doesn't do the rising accumulation, right? I don't even want to see that. That's not even like, I would really, honestly, 1000% prefer that's not what we get. I would love for that to be invalidated to all hell and us go way lower. I would love that. But again, I have to remain logical. I have to be the 10th man. I have to look at maybe the things that other people are not taking into account and not seeing. And to be honest with you, that's where a lot of the opportunity is. What do I think about quants? Does ISO 20022 benefit it? Because, yeah, so ISO 20022. So the thing with the ISO tokens that we talk about, which are XRP, XDC, XLM, IOTA, and Algo. How could I forget Algo? Right, when we talk about those are ISO compliant. Right, it doesn't specifically mean that they're going to be used in ISO, but they are ISO compliant, which means they are like, again, when that list is small, when it's a list of 5 things, realistically, like, especially if you diversify through all 5, you're going to hit on 2, 3 of them. They're not going to just ignore all of the ISO tokens. They have to use something. And then you use data like, what banks are using them, what their partnerships are to confirm who's being used. Now, ISO, that list has grown, right? The compliant coins, that list has grown. It's no longer just a list of 5. It's more like a list of like 9 to 11 now. Quant being one of those on that list. So when you're talking about quant from an ISO standpoint, it's not even because they just work with XRP. Quant works with a ton of projects, to be fair, right? That's literally what they do. Their entire business model is making blockchains more efficient and better, more secure. That's what they do. All right, so from an ISO standpoint, yeah, they've recently been deemed compliant. I think it was like a few months ago. It's not really new news, but the list has grown. So if you're looking into it for that reason, bro, you're definitely on track. FXI China article out about quantitative easing. I don't really care what China does, to be quite honest. With their currency is so trash. But it had to be for what they were. Right? You can't be the manufacturer of the world and have a strong currency, which is something that Trump never understood. All right, perfect. I first bought quant at 40. I don't even know what it's at now. I couldn't even tell you. Is it above 40? Can I get a discount on this? Oh, it's a 62. Sheesh. Okay. So yeah, you up a nice 50% on this, boy. Yeah, look at this. Beautiful fucking wick fill. These things were so ripe to bounce. Oh, man. Yeah. This thing's trading at some of its lows. Huh? Well, this is on Coinbase. Hold on. So to be fair, again, this could just be Coinbase pricing. Let's see what Binance... Okay. Maybe it is at its all-time lows. Yeah, no, this is good, bro. I would definitely add quant to the accumulation list. Quant's one that I've looked into that I've always liked, but I personally have never bought any. XRP accumulation. I mean, guys, a lot of these things are just gonna follow Ethereum and Bitcoin. You should, like, you really, like, honestly, in a bear market for crypto, analyzing your altcoin is, I'm not gonna say dumb, but you should form your cycle bias on Bitcoin and Ethereum. More specifically, you would almost want to just do it on Bitcoin, but Ethereum is tied so closely in its price behavior that you could use that as well. But you would only really be looking at these charts to like get your specific levels based off of the same bias, right? So if you are expecting, Ethereum to fall 30%, then you can look at alts, and alts are usually more drastic in their fall, so you'd want to, advance that by like 30, 35, 42% ish, and so forth. But I wouldn't really just sit here and do my technical analysis on these when these are just going to follow the big boys anyway. But let me look at the 4 hour here. Yeah, I mean, right away, initial thoughts is this is just in the BULPS stage of an accumulation. So this is your BULPS. I mean, again, look, you have your phase A. I'm not going to sit here and do like all the little parts because you guys don't know that. You guys as Wyckoff traders know we don't need to analyze everything when the cycle is already clear. So you have phase A, B, C. This is your spring. You begin to get into, I mean, this is a really long out like phase D, kind of annoying. But then you get that first breakout. You get that sign of strength, confirmed by volume, also confirmed by absorption, beautiful absorption. That you get that BULPS, which is not technically a Wyckofian term that was added after Richard had died. I think it's from like the 60s or 70s. The BULPS got added to the schematics because people, again, identify things and learn and adapt to markets. But yeah, this would be like your BULPS. My thing with this though is like I personally do not trade inside the BULPS. Honestly, it's my opinion that most times BULPS is like a trap, and 9 out of 10 times it actually seeks further liquidity. So actually, I wouldn't expect this just to continue straight up. I would, again, you guys know I hate Type 2 schematics. So right away, if this was going to reaccumulate and be a BULPS and not spring, then yeah, okay, maybe it's ripe. But I hate that idea. I hate that logic. I hate Type 2s. I hate not having springs. I hate not it looking for like deeper liquidity. So for me, like, yeah, I would have fully expect this to kind of still get wiped. Maybe it pops and fills this wick before it does that. But like, this is like a very like obvious path to me for like XRP, following what I expect on Ethereum and Bitcoin. And again, Ethereum and Bitcoin in the same way, I do think they'll get like one more pop before they pull back a little deeper. Before then continuing those buys for us. That's why we're looking to exit on that pop. But yeah, from an accumulation standpoint, this would be like your last phase D environment. I mean, you could really say this is just all phase D. It's just super drawn out. That you wouldn't be wrong. But yeah, this is definitely in that BULPS territory. Definitely in that BULPS territory. But yeah, fam, anything else for me? It is now 10:51. We've been on here for like an hour, 20 minutes. I think that's a good place to end. But if you guys have any final questions, comments, concerns, you guys know I'd love to hear them in the chats. Would love to see some of you guys trading with us this week. If you guys are in the inner circle, right, shout out to y'all. I'll see you guys on those live trading sessions Tuesday, Wednesday, and Thursday at 8:30 in the morning. Unless the markets look so ugly, we don't think that we're going to be trading, but I don't think that'll be the case this week. Yep, that's what I thought as well. CME charts, do you look at them? The CME charts are, there's no, I don't see a reason to specifically, like, there are certain times where I'm like, yo, like, you really just gotta use, because the futures charts are like probably the more accurate charts. Same thing with oil. Like, you see me using this USOIL chart, right? Like, oh my god, oil looks beautiful. Like, there was a time where I was exclusively using the CL1 chart, right? And the CL1 chart is that futures price. This is the official crude oil futures, right? So this is like, again, technically speaking, there are some people that trade smart money concepts that believe unless the order blocks show on the futures chart that they're not valid, because there are times, again, where the price feed's a little different and that the futures chart shows something more clearly. People say like there's hidden OBs on the futures charts that you don't get on typical CFD charts. Listen, I've never had this impact my trading to the point where I felt like I was losing because I wasn't on a futures chart. I never felt like I had that problem, but there are people that are like die hard, I'm only going to use the futures pricing charts. So, and I know there are people trade the CME gaps. There are a bunch of people that do all sorts of things like this. And for me, again, it's never impacted my ability to trade. So, I personally don't use them, but there are times where like I'm like super into it, like I'm on the futures chart, like you can go back and find video proof of me doing that. Like I guarantee you could, specifically from like 2018, 2019. Right now the CME charts and spot price charts have completely different. Yeah, so that's yeah. So, can I just find it by CME Bitcoin? What's the actual one you're using for that? The best way I can find this. What is the actual trading view one that you're looking at? Give me the actual thing to type in here. I forget what it is. Is it XBT? Yeah, CBT CME minis. Is that what you're looking at? Oh no, see this has got all the gaps though. This can't be it. Is that it? I hope that's not it. That looks ugly as all hell. Yeah, these are probably it. I hate charts that have gaps like this, though. Bitcoin 1, yeah. Oh, Bitcoin, oh, BTC 1L. Oh, let's just say BTC 1 exclamation point, right? Okay, yeah, there we go. I was going to say, that looks choppy as all hell. Yeah, I mean, again, bro, it's too early to call like true accumulation. I will say this does look a little smoother. Can I get a side by side? I don't think I'm not paying yet. You're going to need a bigger monitor. That's probably a lie because my monitor is pretty big. Yeah, ETH is probably the same thing. Yeah, I probably should have just guessed that. I don't know why I thought it was XBT. I mean, there obviously is one with XBT. Yeah, this looks more clear. This looks more clear for sure. Yeah, look, you have the CME gaps. So again, some people are gonna look at this and say like, oh, it has to fill the gap, blah blah blah, and like yeah, like eventually it will fill that gap. Again, we're looking at that same thing, right? What did I tell you guys? We're looking at 1600, 1700. Look where the gap is, right? But you don't need the gap to tell you that. Like, I didn't have that on my chart, right? There was no necessity for me to have that. But do I use these, bro? Like, nah, like not really. Like, I didn't know they were the same thing as like crude oil with the 1 exclamation point. I thought it was XBT. But yeah, I mean, to each their own, right? But some people will tell you and again, for me, I'll tell you why smart money traders like these better. There's somebody I know that developed a smart money trading algorithm, right? It's like a little bot. It'll identify order blocks and stuff. It'll set up like risk reward parameters and so much. It doesn't really take off schematics or accumulations in a mine. That's what I trade and I teach. We use order block logic and that stuff, but we don't believe in every order block being an order block, right? We only believe in important order blocks, cycle order blocks, right? Things that are actually going to make the most sense from a Wyckoffean standpoint. But they did notice that when they put their algorithm onto the futures pricing models instead of the CFD and using broker feeds from Awanda, that their bot was significantly more accurate. And that was the only adjustment that they had made, was the price feed that they were using. So, again, is that proof that futures pricing is better? I don't know, maybe. But the robot trades a specific way with those specific rules. I'm just here to share that information with you. Again, it's never affected my trading. And the volume on the CME charts are better for... Oh, Peyton, bro, I 1,000% remember you, bro. You out of your, you gotta be out of your. Some of you guys think that I really don't remember you guys over the years, bro. I've consistently seen you across all of my social media, bro. I definitely remember. So yes, absolutely, absolutely, brother. It's good to see. It's good to see you're still at it. Honestly, I love to see when students, learn from me, take the concepts, and then stick with it for years. Because honestly, again, that's how I got to where I am. That's where I got to my level of understanding cycles. So much love to you, bro. I love that you stuck with it. Love that you're diving deep into the futures and then looking for the accurate data and stuff. Really, really love it. Keep it up. Um, who knows, bro? You get good enough, bro. We partner up on some stuff for real, for real. Because there's nothing I love more than people that trade the same way that I do. Um, I was gonna say as good as I do, but honestly, for everybody on this call, I hope that you guys trade better than me. Honestly, right? I don't want to produce people as good as me. I'm always trying to get better. I always want you guys to be better as well. So hopefully you trade this even better than I do, right? And you blow some stuff that I do out of the water, because that would make me 1,000 times happier. I mean, you have your own channel as well. Yeah, absolutely, bro. Absolutely. Definitely DM me on IG, bro. Let's get something going. I love collaboration. Big fan of collaboration. Big fan. But listen, family, that's it for tonight. Love and appreciate you guys for hopping on. Inner Circle, guys, I will see you Tuesday, Wednesday, Thursday for that live trading. We'll get that execution going. Hopefully, GJ, Ethereum, and if you are magically in oil with me, continue. For those of you that are on here just showing love and support, love you guys as well. And I will see everybody on the next stream. This is your boy Skag, and I am tuning out.